talk a little bit about this. Eric Schiffer joins us from L.A. He's the CEO and chairman of the Patriarch organization. It's good to see you, Eric. And the basic argument,
good to see you.
I thought it was interesting to read it in the Journal, was that you can't really hedge against nuclear war. I mean, it's not even a joking around statement, but it's just things are so bad that as an investor, you can't look at it and say, you know, let me buy bonds to do this or stocks. You might as well just say, let's hope it doesn't happen. And if it does, well, we'll sell everything, but that's the least of our problems. What do you make of the market trying to price something like this in?
Well, I think there's a couple things. First of all, the market actually got the Cuban Missile Crisis right. When you look at the facts, they were accurate. Right. Now, certainly there was a 20% hit because of the Kennedy administration, perhaps foreseeing what would happen. So the market was hit way before Russia had put missiles there. But during that 13-day period, there was actually a pretty good indicator of what occurred, and certainly they were right. I think the market is actually going to be correct overall here. I don't see that you're going to ultimately see a problem. How do you deal with it as an investor? Okay, so look, there are things you can do. You can certainly go to cash. You can hedge through gold. You can hedge through the Swiss franc. There are definitely things that you can do. But look, the best and safest is to go to cash. Yeah. Because even with gold, you just never know. And so that would be the ultimate way to hedge.
Yeah, and the market rallied, I believe, after the Cuban Missile Crisis was resolved after that. And
that's right.
As you said, it went down a lot. And that's a good point, in the months preceding as opposed to the week preceding, which I alluded to. So this time around, I mean, I don't know, but it is a tough situation for investors. And do you think many people are focused on other things, be it tax reform, corporate earnings, and kind of leaving this in the background? Or is North Korea front and center right now for what everybody does day to day?
I think North Korea is one of the factors. I think you also have certainly the Trump policy issues related to tax. I think you also have the hurricane that's in the background as well. The other issue is what's going to happen. Now, President Trump tweeted about trade. I think that there's a concern that if you begin to mess with the underlying structure, the foundation of these interrelationships, so for instance, China, you begin to sanction China in a big way, then that changes the dynamic. And right now, things are working. The economy overall on a global level is working. You begin to mess with it. You change it,
that's interesting.
And then all bets are off.
Because if you look at it, we brought it up a few minutes ago, the tweet he sent out, the president, over the weekend, saying we're going to cut off all trade with anybody who does business with North Korea. And everybody basically said, well, he's not going to do that. He's not going to cut off all trade. China's our largest trading partner. But to your point, what if he does go a little bit harder at China? And the president's logic could be, listen, I'm going to take a little bit of an economic hit here because I think it's important to our national security. That could be an argument. It might not be all trade, but it could change that dynamic, right? And that's a market negative. I would have to think it is.
Well, I think it changes the dynamic as it relates to China. And actually, I think it would be quite effective. I think when you begin to change and you know, put forth some type of sanction on China, I think you're actually going to get movement. Now, on a global level, investors are not going to like it because of what could be the case. When you begin to change these elements, the algorithm, the fundamental components of the algorithm that's working. I mean, there's no question we have a global economy that's doing well. You change it, you put the market at risk, and it's going to react. And I think part of what you're seeing, this volatility, is also coming from that today. Yeah,
we should keep that in mind because the geopolitical or the political argument might be that it's worth it. I got to do it, being, you know, if you're the president. But that's the other thing to watch. Eric, thanks. Good analysis. Thanks for joining us.
Absolutely.